Dear students, in this lecture we are going to learn about budgeting in the context of voluntary organizations engaged in the activities of social welfare. Before we start the session, let us ascertain the learning objectives of this session. In this particular session, we shall provide an understanding about the significance of budgeting in social welfare administration. We shall also acquaint you with the types of budgets and the steps involved in its formulation. Let us see what a budget is. A budget, according to the definition provided by Seam and Siegel in 2008, is a financial plan formulated to control future operations and results effectively and efficiently. We all must have undertaken the exercise of financial budgeting sometimes or the other in the course of our lives. We all estimate the money we have in our pockets and our expenditure for a period of time. This many a times also helps us to save a few rupees to buy the book we have seen in the bookstore or watch a movie over the weekend with our friends. Similarly, an organization also has to plan its financial activities. Before we discuss budgeting in detail, let us try to trace the origin of the word budget. The word budget originates from the Latin word bulga, which meant a little pouch. The word appeared in the English language in the 15th century and was derived from the French word meaning a leather bag. The association of this word with finance first appeared in 1733 in a leaflet entitled "The Budget Opened," written on Sir Robert Walpole. The first use of the term budget, hence, dates from this financial statement by Walpole as Prime Minister and Chancellor of the Exchequer during the excise crisis in 1733. The document described the manner in which Sir Walpole will open his budget or bag to reveal his financial proposals for the country. It was only in the 1880s that the word budget began to be used as a verb in the sense of planning one's expenditure. Let us now look at some definitions of this term. Merriam-Webster's Learner's Dictionary defines it as a plan used to decide the amount of money that can be spent and how it will be spent. A comprehensive definition is provided by Harold R. Bruce. According to him, it is a financial statement prepared in advance of the opening of a fiscal year, of the estimated revenues and proposed expenditures of a given organization for the ensuing financial year. Budgeting is one of the key pillars of social welfare administration in India. The wide acceptance of the Portscope model of administrative management proposed in 1937 by Luther Gulick and Lyndall Erwick in theory and practice of social welfare administration in India has cemented the importance of budgeting in welfare administration. They have described budgeting as fiscal planning, accounting and control, and is one of the 7 core elements of Portscope model, which include planning, organizing, staffing, directing, coordinating, reporting and budgeting. Now let us see why a voluntary organization has to take up the exercise of budgeting. First and foremost, the budget presents the financial status of the organization. Based on the budget, future financial decisions can be undertaken. The budget provides a direction to the organization for utilizing the available financial resources in line with its aims and objectives. It determines the priorities for the organization as per the available financial resources. All organizations have a sanctioned budget, and budgeting aids in spending of the funds as per the sanctioned budget. It augments the efficient use of resources and contributes to organizational efficiency. Budget importantly prevents the organization from incurring expenditure beyond the available funds. This ensures that expenditures are kept within a definite limit and funds do not get depleted before the end of the project. Funders are very important for an organization, and budgeting enables the organization to present before the funders the manner in which the sanctioned funds have been spent to meet the objectives of the project. It makes the organization accountable to the funders and aids in the timely completion of the projects. Budgets additionally aid the organization in ascertaining its exact financial position. This enables an organization to determine its requirement for funds and design appropriate funding strategies for the same. Budgeting prepares the organization for long-term financial sustainability. Finally, budgeting ensures that the funds available with the organization are not misappropriated. Budgeting is also important in every stage of the project. In the planning stage, a budget is important for planning a new project and determining the project cost. The budget enables the organization to present before the funder a financial roadmap for the project. It helps a funding organization to understand the manner in which the funds will be utilized before it can attain the objectives. A budget tracks the organization to keep a track of the actual cost and against the budgeted cost. The budget is used to evaluate the success of the project. Budgets, hence, are important for different stakeholders for different purposes. The members of the governing body. The governing body formally approves the budget and monitors the manner in which the organization is adhering to it. Members of the organization. The budget enables the members of the organization to keep a watch on the activities of the organization. The functionaries of the organization should also keep a track of the budget. They need the budget to keep a track of the financial position of the organization. Another important stakeholders are the project managers. The budget aids the managers to undertake financial monitoring of the project activities. Fundraising team, proposal writing team are also involved. They need the budget to be presented to the potential funding agencies. Most important are the finance team. The finance team needs the budget to ensure that there are sufficient funds to meet the estimated expenditure. How can we forget the funding agencies or the donors? The budget prepared by an organization informs the funding agencies or donors about the manner in which the grant will be spent. The project beneficiaries or the community partners. The beneficiaries through the budget can track if the organization is efficiently spending the funds according to the objectives of the project. Now let us understand what are the principles of budgeting. The first principle is planning. For preparing a good budget, the exercise of planning is essential. Organizations can rely on participatory planning exercise in the budget planning stage. Next important principle is advanced preparations. The organization should initiate the process of budget preparation in advance before the beginning of the financial year. It should be annual. The budget is prepared on an annual basis. It should relate to a period of 12 months. It is advisable to prepare the budget according to the fiscal year, that is 1st April to 31st March. The balanced budget. The budget shows congruence between the income and expenditure in a financial year. It should be accurate. The budget should be accurate and conservative, keeping in view the resources available within the agency. It should be transparent. The budget is indicative of the goals of an organization. It should be based on the actual income and expenditure of the organization. Another important principle is of gross income. The estimates have to be formulated on a gross basis by considering income and expenditure individually, not the net position. The rule of lapse. If the money allocated in the budget remains unspent, then the approval of the money lapses and the funds cannot be utilized until further approval is granted. Classification is another important principle. To ensure easy understanding, the expenditure mentioned in the budget should be classified in an efficient manner. Finally, form of estimates should match the form of accounts. The heads of the budget should be same as those in the account books. Now let us try to understand the major types of budgets. Management accounting for non-government organizations provides a very detailed classification of the budget. The first categorization looks at 3 types of budget: the income and expenditure budget. This budget lists all items of income, funding and recurrent cost for a specific period. The next is the capital budget. This budget lists one-off expenditure which will become the assets of the organization. For an example, the purchase of a vehicle. Then we have the cash budget. This budget shows the predicted flow of cash coming in and out of the organization each month. Based on this budget, we know how much of cash is available for the organization in the bank. And based on this, the organization can take many financial decisions, like whether to pay the vendors, when to pay the vendors, and when to ask for funds. Another classification looks at budget and provides a two-tiered classification, which it states that the budget can be either balanced or not balanced. A balanced budget is a budget which shows that anticipated income is the same as anticipated expenditure. If it is not balanced, then we have a deficit budget. This budget shows that anticipated income is less than the anticipated expenditure. On the other hand, we have a surplus budget. This budget shows that anticipated income is more than anticipated expenditure. Moving forward, there are approaches to writing a budget, which we shall discuss further. Based on this, we have three kinds. One is incremental budget, one is a zero-based budget, and another is an activity-based budget. We can also have a budgets on level of budget detail, in which we have the master budget. This budget shows overall anticipated income and expenditure for the whole organization for the year. We have the consolidated budget. This brings together several project or program budgets in a table to show a summary of each and overall total. Then we have the project or program budget. This budget shows income and expenditure for a specified project or program for the implementation period. Based on time periods, we have an annual budget. This budget outlines anticipated income and expenditure or cash flow for a fiscal or calendar year. We can also have a multi-year budget. This budget outlines anticipated income and expenditure or cash flow for 2 or more successive years. We also have a phased budget. This describes a budget which has been broken down into smaller time periods to reflect the budget requirement for that particular period according to the level of activity. In certain cases, there are specialized budgets also, like we have the donor budget. This budget is produced in the format required by a funding agency and usually accompanies the funding proposal. And there is the flexible budget. This budget is regularly reviewed and updated to take account of changes in levels of activities. We also have a funding grid. This is a special budget which reconciles anticipated income sources to the program budget. This shows which funding source is funding what and identifies the funding gaps. And we have the rolling budget. This budget always covers a fixed period of months. It is updated every month or quarter to include figures for the fixed budgeting period. Traditionally, the exercise of formulation of the budget of an organization was a top-down exercise and involved only the senior functionaries of the organization. In the recent times, it has been felt that the exercise of formulation of the budget should involve people directly involved in fundraising and project implementation to make the budget more realistic. Few organizations have also involved stakeholders from the community in the budget planning exercise. This approach is referred to as the bottom-up approach. Now let us see two budgeting techniques commonly adopted by the social welfare organizations for their purpose. One is the incremental and the other is a zero-based. In incremental budgeting, which is a traditional approach, the budget of 1 year is based on the actual budget of the previous year. Incremental amounts are added for the new budget period to allow for inflation and known changes in activity level. This activity, however, does not account for changes in the income and expenditure of the organization during the year. Now we have what is known as zero-based budgeting. In this approach, funding is based on program efficiency and necessity rather than budget history. As opposed to traditional budgeting, no item is automatically included in the next budget. The budget, as the name suggests, starts from a zero base, and each line item has to be justified for its needs and costs. This definitely involves formulating a new budget every year, without reference to the previous budget. Most importantly, in this technique, justification has to be provided for each activity of the organization on the basis of cost-benefit analysis. The underlying assumption of this technique is that there are no present commitments with the organization and there is no balance to be carried forward. Now let us look at the steps which are involved in formulating the budget. For a budget to be formulated for a fiscal year, the preparation is initiated mostly in the month of December. The process starts with meetings with the stakeholders at the grassroots level. After these meetings, each department within the organization prepares a budget estimate based on the financial requirements of the department. In the next step, the departmental budgets are consolidated at the level of senior management of the organization. Depending on the availability of funds with the organization, an external consultant may also be hired, or sometimes a budget subcommittee is consulted. The possible sources of income for the organization are taken into consideration by the management. The final consolidated budget to be prepared by the chief functionary of the organization is placed before the governing body of the organization. The budget, after approval from the governing body, is placed before the general body comprising of all the members of the organization for its confirmation. For formulating a budget for a project proposal, the following points have to be followed. Firstly, the project objectives. The objectives of the project should be clearly defined as per the SMART framework, which states the objective should be specific, should be measurable, should be assignable, realistic and time related. Also, there should be a strict adherence to a time frame, which is the time frame for which the project shall continue should be finalized. The project activities. The activities of the project to achieve the objective should be clearly defined. Resource identification. The resources needed to perform the activities should be ascertained. Cost identification. The cost of all the identified resources should be determined. This should take into consideration the inflation during the course of implementation of the project. Most importantly, we always forget to include the hidden costs. Hence, they should always be included in your budget. The format. In case the budget is prepared in response to a proposal, the prescribed format for submitting the budget should be strictly adhered to. Let us take a simple example. I have for you prepared a tentative budget for a 2-day capacity building session for community level health workers. As we can see in this budget, there are various columns. The second column provides a description of the line item. In this case, we require a venue, so it describes venue. The next column describes the unit type. Here we require the venue for number of days, so we have put days there. Number of units, we have put 2, as in we require this venue for 2 days. The next column specifies the quantity. The number 1 states that we need this venue for 1 day. We put the unit cost for the venue in the next column, and finally we calculate the total cost. Say for this line item, we then multiply the number of units into quantity into the unit cost. Finally, our table has a column for remarks. Say for this line item venue, we show that the cost includes charges for the projector also. Similarly, we have various line items. Finally, we give a subtotal which includes the costs in various line items. Then we also calculate the contingency, which is more often 10% of the total cost. And finally, we give the grand total. This is a very simple budget which I have shown for your understanding. Finally, let us try to understand the issues in the implementation of the budget. The following issues are usually associated with the implementation of a budget. The first being, the budget is based on estimates of income and expenditure, and this may change over the fiscal year. This impacts the implementation of the budget. The expected funds from various sources may be delayed due to circumstances beyond the control of the organization. This can also severely impact the budget and also the implementation of the program. Implementation also suffers when the budget is not closely monitored by the organization. Sometimes attrition of trained staff and unfilled vacancies in the finance department of the organization also hampers the implementation of the budget. Improper maintenance of financial records by the organization also leads to issues in implementation of the budget. Another major factor impacting the implementation of budget is a lack of proper communication between the finance, fundraising and the program implementation wings of the organization. To conclude, we can say that budgeting is an important pillar of social welfare administration. The vision of the organization finds expression in its budget. Formulation of a realistic budget ensures efficient implementation of the welfare projects, protects the assets of the organization, and manages the internal risks. A well-formulated budget lays the foundation of a strong organization and enables it to achieve the objectives for which it was established in a time-bound manner.